Thank you, Kate. Thank you, Reed Corporate, for putting on another great event. And I'm happy to come back and hear people tell me that they should have bought at 59 cents the last time we were here. I think we just about scraped $2 today, so we're doing pretty well. I've shown this same slide a few times. I will keep showing it ad nauseum. This is how you change the future of a company that was once in big trouble, and that is to drill holes. Shares on issue, obviously it's a bit out of date because we are ripping with the gold price today, and the market seems to be pretty buoyant in the gold space, which is great. Ramelius Resources, as was just spoken about, 19.9% shareholder, and we are currently engaged in a scheme of arrangement which will see us, if all things go to plan, merge with that company at the end of July into early August this year. That's where we're situated. The Murchison region of WA, incredibly, I'd say, underexplored area, which has become fairly evident to most people. The key takeaway from this, if I can scribble on here, and apologies, geos with crayons, I'm told, is a fairly common thing. That's Mount Magnet. This is Dalgaranga. There's 65 kilometres of formed road between those two spots there. That's why Ramelius is so interested in the 2.3 million ounces at 9 gram a tonne dirt that we've unveiled so far, but we haven't taken the foot off the pedal. We are still growing that resource. This is our resource tables, and it feels like I'm kind of showing off at this stage. Well, you just talk about numbers that are just incredible, given that in February 2023 we were a 10-cent company with very few friends. To be able to come back to this conference a couple of years later and talk about a merger that will create almost a $4.5 billion market cap company that's already producing massive cash flows, and it will do it for an enduring period of time when combined with the high grade we've found. This is the Never Never and Pepper system. You can see in the top there the underground drill drive, what's now known as the Juniper Decline, which allows us access to drill and access to the top of that mine, and this will be one of the highest margin gold mines going around. We're producing a study at the moment which we obviously will integrate with the Ramelius operations to show people exactly how much money this is going to make. You can see some drill hits there. These are some outstanding numbers. You struggle to find these kinds of numbers in one deposit, single drill holes, and we've produced many and continue to do so to this day. Both of these prospects are still open at depth. Never Never's been drilled down to over 1,000 metres below surface. Pepper is incredibly high grade, and we continue to produce some of the best drill holes seen at this project. And Freak, which is just off to the right-hand side here, or to the south. A few people have been asking me what's going on there. That's a new discovery. We will continue to drill that from underground now that we have better access with that drill drive. Once we get into position, we'll be able to drill that more effectively. Just switching over to the south side here, and we have split this just recently to make it obvious. These are not in line, these two projects, or these prospects. You've got two trends in the right-hand side there. That plan view shows that these used to be one continuous system, but they've been offset to each other. There is a large late stage structure that cuts through and basically offsets these two different mineralised horizons here. And the West Winds area, which we've just started putting some new drill holes out on, outside resource in this area here, is showing some very good thicknesses of mineralisation, showing that Never Never and Pepper alone are not the only things to get excited about in this area. And the study that we're producing will only focus on Never Never and Pepper at this stage, and everything else is upside. This is just to show in cross-section what I'm talking about here, that late stage structure that cuts through. You're basically looking at the low-grade Gilbey's open pit that was previously being mined by Gascoyne Resources. We've now worked out that there's a series of high-grade structures that cut through that stratigraphy package that they were mining, and we've now cracked the code, and you can see, based on the growth that we've been able to prove, that we've really got a handle on this system. This is our top 20 drill holes. In the green are the Pepper drill holes that we started putting out. The white ones we thought were pretty impressive. That was Never Never. We thought we were onto something pretty special there. We tested the area back between the Gilbey's open pit and the Never Never discovery, and we found that there was even better grade there. Those green ones are the ones that have just been coming through, and then the three yellow ones there are the most recent ones we put out last week. So we're still able to deliver top 20 intercepts at this system, and we've almost cracked over 300 gram metres across our top 20, which is pretty crazy. This is our growth path. And I'd just like to point out there's a lot of people at this conference that are presenting on behalf of small companies with small market caps that are very hopeful. This can happen to any one of those companies that you talk to. The right people, the right geology, the right strategy, you can take something from 107,000 ounces and a 10-cent share price and take it right through to a $2.4 billion merger to create a $4.5 billion company. Anyone can do that here. These are the areas we're currently drilling. We haven't taken the foot off the gas. This area here is the Freak area. This area here is West Wind's down plunge. This is up dip Pepper and Never Never. We couldn't previously access that area because of the shadow of the pit. And then this is Never Never North, creatively named. We'll find a proper name for that if we hit some good gold out there, and we are very hopeful we will find some. On the left-hand side there, you're looking at the ounces per vertical metre. This is the block model that we currently have. The ounces per vertical metre exceed 4,500 ounces per vertical metre, which is pretty incredible when you think about it. There's a few people that talk about bigger numbers than that, but they're not as concentrated as these ounces here. What you're looking at here are the stopes that we've designed in terms of conceptual mine plan. Each one of those panels is 20 by 25 metres, and you're looking at anywhere up to 13 metres thick in terms of volume. These are single stopes. We're not talking about 7 different mine levels that you have to get into to mine these ounces. This is one tabular ore body that is fairly consistent. We have separated it into Never Never and Pepper. This is Never Never here, a great South Australian gin distillery. Pepper is probably one of their tastiest gins, so if you get the opportunity, please make sure you do. Try it out. Those colours there are indicating the grades in the stopes, over 6 grams a tonne in the orange, and on the right-hand side, you're looking at ounces per stope panel. The red ones are over 10,000 ounces per stope. There's not many mines around that can drop over 10,000 ounces on a consistent basis every stope panel. Just recently, we mounted a 5-metre high Spartan helmet above the portal entrance to our underground mine, and that was in preparation. If we got taken over by someone, that helmet will stay above that portal for an enduring period of time because it's going to be too expensive to take it down. We're over 1,880 metres on our 2,350 metre journey down to Never Never at the moment. That phase 1 will put us 100 metres away from Never Never. Just some flash photos there of some geos underground, logging some core and doing some drilling. It's real. This is just to take it into, give you a bit of context. That's a conceptual mine design. Again, I'll just highlight, Never Never is this area on the left-hand side. 1.5 million ounces at 8.8 grams a tonne. On this little bit here is just Pepper, 870,000 ounces at 10.3. We actually think it's higher grade than that, which is why we've recently re-engaged drilling that area, and we've proven it with some of those most recent drill hits, hitting that top 20 that have been above that resource grade. I'll just zoom in a bit more here so you can see. We're coming from the old Gilbey's open pit. If I just rotate it around, the west wall, 2 entrances there, one's for vent, one is for haulage. That will be a mine. Those blue areas there are just conceptual at the moment, but make no mistake, we will turn this into a very productive mine. That's our 65,000 metre underground drill program that's ongoing at the moment. This area over here is the area we're drilling at the moment, West Winds. That's open at depth. When I took over the company, I needed to pay some bills. I asked the geos where the highest grade stuff in that pit was. We mined it out of sequence. I pissed a lot of people off, but I got rid of our hedge book and I got rid of our debt. That system is actually the whole reason why we're sitting here today to be able to talk about high grade. I'll run through it in plan view in just a sec. You can see how tabular this ore body is here if I just rotate it around. One single system, fairly continuous, and you just access it, access it, access it. Nothing tricky here. Back into plan view. These high grade structures, I will scribble again. Apologies for the shakiness. Those red lines are just structures that cut across the stratigraphy. If I don't draw it too badly, that is the stratigraphy, the yellow line. It's a rock package. It's just very permeable. Everywhere the red line crosses, you get high grade. That's Patient Wolf, which is a prospect we're still following up. That there is the Conceptual Never Never open pit. This is Pepper. That's West Winds. Four Pillars and West Winds. And then you've got Sly Fox and Plymouth, which are two high grade systems. These already exist. So all we did was work out what that code was, crack it, and start drilling it. This area here, I should draw a red line just here. There's another structure through there. Existing gold mine, Golden Wings. So there's plenty of potential outside of what we've already defined. Just in this area here is the 2.3 million ounces. That's our mill. I'll go through the plan. I used to talk about how we would do this on a standalone basis, and up until we merge, we are still operating as a standalone business. But obviously, we're very considerate of the fact we now have someone who would like us to merge with them. We will emerge from that merger with a considerable ownership of that company and also 275 million in cash to distribute to our shareholders. Our strategy has always been about growth. We've proven it. We've drilled over 180 kilometres of drilling. As I said right at the start, the way you unlock value is by drilling holes. Don't be scared, drill the holes. 65,000 metres from underground, that is underway. We're going to continue to produce news flow, high-grade intercepts, resource updates, a maiden reserve, which hasn't been seen at this operation for a couple of years now, and an integrated study that shows how this will make money going through, initially, the Checkers plant at Mount Magnet, 65 k's away, and then we will look at what works best integrating our own mill into that larger company. What is Spartan plus Ramelius? Cash flow with discovery and growth. Don't know how many people noticed the other day, but Ramelius put out their quarterly saying that they had produced over 200 million free cash flow in one quarter. To put that into perspective, there are some $12 to $20 billion market cap companies producing half that cash flow. Ramelius is a consistent cash flow producer. This considerably de-risks us as an explorer moving through to development on our own. We will be allied with that company. We'll be almost 40% shareholders of that company, and we'll be exposed to all of that cash flow through the period of development. The structure is a merger scheme with a backup recommended takeover. So if for whatever reason that scheme falls over, the board of Spartan is recommending a takeover bid in which Ramelius will be a 19.9% shareholder, so it makes it very difficult for other people to get involved. Why are we doing this? We're de-risking. We have the proximity. There are some very good financial benefits. You can imagine, as the previously failed Gascoyne company had accumulated 270 million in tax losses, that having a cash flow producer as part of our business and being able to integrate those losses into that that cash flow generating business will be incredibly beneficial for the combined company. The timeline, as I said, late July, early August. The metrics, I won't read out the numbers, you can see it there. But the outcome is we will own 40% of that cash flow generating business, and we'll be able to demonstrate over a decade of high cash flow generation from the combined entity. Just some other pretty pictures, and that's about it. Thanks very much.